All right, folks, we are back for the Reg.A Money Show, part 2 of this episode. Miguel, before we get into it, we're talking about some of these really kind of cool things about Tier 2. And I was noticing the other day on a website that they mentioned that about 291 companies are using Reg.A right now and raising about $400 million so far in funds. But the interesting part about this is that according to the study, it says that most of the Regulation A+ companies have no revenue and limited assets, which is really kind of cool. This is one of the reasons why they're listening to the show, because we're targeting that particular company, like that contender that needs to know this information. So with that in the back of our mind, why don't we hit the question to take the last couple of episodes that we have, bring it all full circle to our listeners.
Yes, perfect, Ron, perfect. Listen, our question is coming from Dakota. I guess Dakota is a female entrepreneur. She's in Atlanta, Georgia, which is back on the east side. And Dakota's question is like this: gentlemen, I appreciate the show. Our company and officers of our company were introduced to the Reg.A Money Show from one of our vice presidents. We have now enjoyed the show, and we listen to it as a team. What up with that? That's great. All right. Thank you, Dakota, and the team out there. Listen, so here's our question. When formulating our Articles of Incorporation, we only have one type. Our understanding of your last show is that there are possibilities of different structures of Articles of Incorporation and different types of designation for different types of shares. Could you please articulate and go over some of those options that when we reorganize our Articles of Incorporation or amend our articles, we would like to know where we could find opportunities to bring in our investor pool. Oh, okay, great. Mm-hmm. So this is what I'm talking about, Ron. You see this? This is just awesome. Whole management teams now are listening to the Reg.A Money Show together, so that way they can pick this thing apart and figure out what they're listening to. So Dakota, we appreciate you listening. To the staff at your company, we appreciate you guys joining in. We really appreciate that. So here we go. So Dakota, as you have been hearing on the Reg.A Money Show, me and Ron are not attorneys, okay? Me and Ron do not provide legal advice in any form, in any way. What Ron and I would like to do is we present this information to you, for you, our listeners, to do your due diligence. For you, our listeners, to develop your plan, to take your plan to your specific attorney, be it your in-house counsel, your proposed SEC attorney, and if you guys ever need any help with the recommendations of SEC attorneys, Ron and I are here for you all the time, okay? But so what we'd like for you to do is to take our information, formulate your strategy, and then take it to counsel, so that way you can always run it. But I do not want you standing up and then telling your attorney, Miguel from the Reg.A Money Show told me that this is completely what we should be doing. Miguel is making a recommendation for you to strategize and giving you some industry best practices, okay? So what I'm talking to you about is what Ron and I have experienced and what we've seen in the industry as some of the best practices from some of the filings that we've been able to review and some of the filings that we've been a part of. So Dakota, yes, definitely structure your company. If your company is already structured and you only have a common stock issued, what you want to do is you want to file a specific amendment, okay? Now, when you file this specific amendment, you're going to want to designate common stock and preferred shares. Now, what you can do, Dakota, is because you don't have your designation series yet, you're just going to want to go through the motions. You want to set it up so that way you can structure it. Now, what I would recommend is this. When you're doing your Articles of Incorporation, or guys, if you already are incorporated in your state, what you want to do is you're going to want to file an amended. So regardless if you're filing an amended Articles of Incorporation or your very first Articles of Incorporation, what you're going to want to do if you don't have the specific designation yet, so like let's say you're going back to like show 46 and you're getting ready to start the seed money round where you're going to try to bring in friends and family. So you're doing your first term sheet. The first term sheet is going to be a little equity or a little combination, the hybrid equity with a little bit of debt. So what you want to do then is you want to designate blank check preferred. Now, blank check preferred is exactly what that means. It's blank. It's blank check. It is to be determined later down the road. So an amended Articles of Incorporation can provide you a great vehicle to be able to designate the number of common stock to be issued, and authorized, not issued, but authorized, and the amount of preferred that you are planning down the road to issue. Now, if you guys have already issued and have listened to like show 47, you realize that you're going to need some form of enticement, so you're going to do a special designation for those investors that get in on the very first couple of rounds. So you know that you're going to need designation number A, or designation series A, and then you're going to want to take care of the officers and directors, so you're going to give them series B, right? And then you're going to want to give those people who maybe funded you the very first round, you're going to go back to them with maybe series C, and each one of those are going to have a different designation. But if you're not there yet, what you're going to want to do is you're going to want to designate blank check preferred, and the number is to be determined. I've seen everywhere from 1 million shares. I've seen everything from 30 million shares to even 100 million shares of authorized preferred. So now you have your Articles of Incorporation. Now you have set yourself up to be able to issue the stock. Now you've been able to issue the stock through what's called an amendment or a subscription agreement, or some type of vehicle that allows you to take the common stock or the preferred out of treasury and issue it to a shareholder. Now, that's mostly done through a transfer agent. But many times, because we're dealing with startups, a startup company will act as a transfer agent. And what you're literally doing is you're transferring the ownership of your common stock or your preferred to that investor. And how do you do that? Well, you either do that with a board resolution, or you do that with a subscription agreement. And we talked about the subscription agreements as part of the offering, as part of the term sheet, as part of or you're going to have an instrument of debt that somebody has given you some form of consideration for your stock. So that looks like this. It's very simple. You take your shareholder equity account. You're going to debit or credit the shareholder equity account, because now you're receiving capital, and you receive the capital, and then you take some shares out of that account and you give them to the shareholders, and those entries are done, and it goes right onto your balance sheet as shareholder equity. Now you have your shareholder equity. Now you've started to develop your balance sheet. Now you're ready to take the next step. Now you take all the term sheets that you have devised, right, and you're going to put them together, because guess what? As part of your Regulation A, Tier 2 plus, Regulation A plus Tier 2, all right, 30% of the offering can go towards investors that have already participated in your subsequent offerings, your founder, your A, your B round, your seed money round. All those guys are now going to be able to participate in your Reg.A offering. So you're going to want to bundle all those up. You're going to want to get all your subscription agreement, all your debt, because you're going to have to disclose them as part of the offering statement. You're going to have to tell people, and you're going to have to tell the auditors, because we've talked about this. You're going to disclose to the auditor, look, I've been able to raise $250,000. This $250,000 came, $150,000 of it was straight common stock that we sold at $1, and we sold some debt. We sold another $100,000 in debt at 5% with a warrant or a preferred or however you guys structured that, and that's how we did it. So you're going to put all that together. And why is that, guys? Because now you're getting ready to do your Reg.A offering. Now you've got your seed money. You've put that in the bank. Now you're getting ready to take that next step. Now you're looking for the $5 to $7 to the $10 million, to maybe even $2.5 million to get you over that next level. So now you're going to turn all of that equity that you've created and sold, and you're going to be able to give them a nice exit to be able to exit out of your stock. Maybe they're going to say to you, no, hell no, I'm not selling right now. No. Wait till you guys go public, and I can get, a 5 times or a 3 times or 10 times return on my investment. No. I'm not going to be part of this offering. I'm holding on to all my stock. You guys have been really good. You guys, I've been looking at your technology. I've been sitting in on some of your board meetings. I've looked on your website. I've kept up with all your disclosures. I love the way you write letters to your shareholders. Whatever that may be that the company is doing to entice and keep their investors holding on, because you want those investors that come in on the very short money. You want them to be long. You don't want them to be long. You want them to be monkey long. Monkey long is like they're holding onto a branch with their hand, their feet, and their tail. They're never going to let go of that. They're never going to let go of that stock until it really makes it enticing for them. And that's what you guys are looking for. Those are the type of investors that you want to bring in on the first couple of rounds. You don't want these guys that are just going to flip your stock as soon as you go public. You want some people that are going to hold on to it and drive the value of the stock up, So what do you have in Synopsis, Dakota? This is what you have. If you have Articles of Incorporation the way that you stated, I would go back to the Secretary of State of Georgia, because you're in Atlanta. Go to your Secretary of State, file an amended Articles of Incorporation, designate the blank check preferreds, designate or bring up your common stock, so that way you have enough common stock to be able to issue to the existing shareholders if you haven't done that yet, and also your officers and directors, and make sure you designate some stock for those officers and those control people, so that way you can keep your management team in line, and not only in line, but keep your management team around you, so that way you guys can continue to build the business, because that's what the investors are going to be looking at. They're going to want to see consistency. They're going to want to see the long-term plans of you and your management team growing your business, right? So then you do the articles amended, or you restate the Articles of Incorporation, and now you have the basis to be able to go out and go to your SEC attorney and say, this is what we've have, this is what we've done, this is the way we've sold it, this is the way we're structured, here's our balance sheet to our auditors. The auditors put everything together with the offering sheet, and now you have your Reg.A offering with a nice 30% cut to all those people that believed in you way back when you were nothing, when you were just a little flicker in your guys' own eyes, and now you're going out to the market and accessing the capital markets with investors from all around the United States, from investors from all around the world, because you have a great marketing campaign, because you have a great following, and there you go. That is, in essence, everybody, okay, in essence, some of the most fundamental procedures that you must have to be able to have a very successful Reg.A plus Tier 2. Ron, I don't know if I can put it any more succinctly than just laying it out, because that's what I do. I just lay this stuff out, and people just eat it up, Ron. I don't know.
My head is spinning over there. I'm going to have to listen to this over and over again a few times, because that was some really great information on that. And, as you were going to that explanation towards the end, I kept thinking to myself, you're about the 30% and the investors getting out. Perhaps maybe that's one of the reasons why Reg.A is really not doing well in terms of a lot of the stocks out there, because I think, Miguel, these investors are trying to get out real quickly, and then maybe they're not really in it for the long run. And perhaps that's the problem with Reg.A at this point.
Well, I think there's a couple of problems, but I think there's a lot of solutions. And for me, the problem is this. The problem is that companies have to start telling a better story, Ron. They got to be telling a better story because, if an investor is trying to